DSCR versus conventional loans. Deep, I always hear this. Which route should I go? Well, in the next few minutes, I'm going to be explaining you to exactly what is the difference between a DSCR and a conventional loan, how to qualify for each, and which one will fit better for your goals. My name is Deep Jeslin. I'm one of the managing partners here at Munoz, Jeslin & Co. And what banks don't want you to know is why there is thousands of real estate investors that are switching to DSCR loans. Let's pretty much start with the truth here, okay? Conventional loans are built to keep investors limited. What do I mean by that? Well, think about it. They require tax returns, W-2s, DTI ratio, and if you have more than 10 properties, they'll just flat out stop you right there. If the bank is so quick to allow you to deposit money into their bank, and they already have all the information they need about you, trust me, they know your name, they know how much money you make a year, they know where do you live, and they know everything about you. Why does it take 60 to 90 days to close on a property using a conventional lender and have to submit so many documentation where if you want to deposit money into their account, it only takes a few days? Well, let me give you the harsh reality truth about the difference between conventional loans and DSCR loans. Conventional loan, they care about your personal income. And I really don't understand why. Because even if you have a property that will cash flow you $2,000 a month, they're still not going to approve you if you don't make enough money to cover a $2,000 payment. It's really ridiculous. And that's not how real estate investors actually grow. This is exactly why Wall Street, private lenders, hedge funds, the big real estate guys you hear about in the industry don't actually use these kind of loans. They use debt that's based on cash flow. DSCR stands for Debt Service Coverage Ratio. It pretty much measures how much your property earns compared to your mortgage costs, not your personal income. So all you need to qualify for a DSCR loan is a 680 plus credit score, and you can always work with somebody that can help you fix your credit. We also offer that as part of our packaging. 680 credit score, and if you have the money for the down payment on the property and you underwrite it, you know it's going to cash flow, which means your DSCR ratio is above 1.0, then you should be able to get a loan, right? It makes common sense. Hey, if I'm buying something for $1 million, where if I put $200,000 down, the property will still be able to cash flow to pay off my, $5,000 mortgage and leave me with net cash flow in my pocket. The bank should lend you on that asset, right? Well, that's not how it really works. They don't. That's why DSCR loans have been one of the fastest growing private credit product in the real estate industry, or really in the financial industry right now. It's really only a 5 to 7 year old product. All you need to qualify is a 680, like I said, and the down payment for the money. But what's really more fun than that is that the DSCR product has been growing so fast, rapidly over the past few years. I think by 20 to 30% over and over a year. And in probably 3 to 5 years, most, if not all, real estate investors will use DSCR loans to buy more properties and build their rental portfolio. Now, our syndicated DSCR or hybrid DSCR product really is going to take your real estate business to the next level. It's modeled after Wall Street structuring. Our other managing partner, Mark Munoz, has extensive experience in the financial industry when it comes to structuring businesses and structuring deals, and he's really the one that came up with our syndicated DSCR product, which is something I'm really excited to talk about today. It's a 30-year mortgage, 30-year fixed term, as little as 10% down, and we can close it as fast as 3 to 4 weeks. And you really don't need to fit the bank's box, because we'll just build the box around you and your deal. Let me give you an example. One of our borrowers' markets was actually declined by 3 banks on a rental property that he wanted to buy because he didn't make enough money to cover the payment, and he was really frustrated. But his rental property was generating $2,700 every single month with a mortgage payment of $1,900. We qualified him for a DSCR loan, gave him a pre-qualification, funded 90%, okay, of the deal using none of his own cash, and he's cash flowing $800 per month into his pocket. Here's how. Now, where the strategy gets really creative with DSCR loans and really fun is when you stack it with a different tranche of debt. For example, let's just say you're buying a property for $100,000 and you need 20% down, right? Most DSCR lenders, and even us, we offer 15 to 20% down. Is our lowest down payment option is 15% down. And if you want to know more about how to qualify and what our DSCR product, you can always click the link or look up Munoz and Jeslin and be able to speak to our team to tell you more about it. But pretty much, we used let's just say the deal was $100,000. We used $10,000 of our own cash, $10,000 in a term loan, so we can get a working capital term loan, an 80% LTV DSCR loan, and pretty much the borrower was able to get into the deal using only 10% of his own cash. You can also do this with bigger deals. We like to do the bigger deals, right? You can buy something that's $1 million where you use $100,000 of your own cash, maybe 10% is seller financed over 5 years, 5-year balloon payment, interest only balloon payment, and then 80% LTV DSCR loan, and you pretty much got into the deal using only 10% down. This is the exact same structure big institutions use, but you're just using it on smaller deals, right? Look at how all these big multi private equity firms or real estate players play the game. They don't actually use a lot of their cash, if any, to buy deals or get into deals. They either raise capital, use OPM, leverage their credit, or use private lenders. So as long as you have an asset now in today's world in real estate where it can cash flow, then you can literally go ahead and qualify for a DSCR loan and maybe raise the capital, get a working capital loan, use seller finance as a down payment and get into the deal, build wealth, create passive income, get some tax benefits from the real estate property, not using any income verification or any of your own cash. And that's the power of real estate today in 2025. And it's only possible because of those DSCR products that we have. We've funded over 1,700 real estate investors so far and over $48 million worth of working capital and DSCR funding just last month alone. We've done deals in Texas, Louisiana, Ohio, New York, New Jersey, Pennsylvania, really all around. I think we're in about 47 to 48 states right now. So if you're a real estate investor or somebody that wants to get into real estate and you don't have the best income verification and you don't have 2-year tax returns or any of that stuff, or you just have a deal that's going to cash flow and you have the down payment, then come to us. Let's talk about your deal. Let's underwrite it for you. Let's take a look at it. Let's get you pre-qualified so you can start buying property using DSCR loans that are a lot better than conventional loans that are capped out. The only benefit of conventional is that they're a little bit lower interest rate, and that's about it. Okay, you have to understand capital is becoming more accessible in the world of the future, and you really have to adapt and start using those products that the top real estate investors are using, especially if you want to scale. If you want to understand how we also combine working capital with our DSCR product, you can also speak to our team. Click the link below and you can book a call to talk about either one of our products or both of our products and see how we can help you scale your real estate investment. And if you really want to understand how to use our working capital product where you can qualify for $50,000 to $500,000 in working capital that's completely unsecured for down payments, rehab costs, construction costs, and other costs that are require unsecured capital, or you're looking for DSCR loans as low as 10% down, then go ahead and feel free to book a call with one of our team members and we'll be able to speak to you and assist you and see if you qualify to work with us.